Hey guys, welcome back to another real estate market update. I'm Uros Markovic and we're going to unpack all of the information we have from month of September. In times of uncertainty, as more time passes with continued inflation talk, tax hikes like the other days in a house common motion, interest rate hikes, and overall housing price crash concerns in media, my experience shows me that people are forming two sides. A side that takes the information in, make the adjustments and continue to push forward with their life goals. And the other side that takes the information in, but end up in a sort of a paralysis mode, unable to decide what action to take. Now, this might sound a little bit harsh for some of you, but I would suggest you think about it for just a moment and decide on which side you'll be finding yourself in lately. I say this because as realtors, we don't help people buy and sell houses. We'll help people as they undergo their biggest life changes. People's ability to undergo these changes are certainly impacted by other external elements happening around them, but paralysis or inaction is nearly never in their best interest as their life continues to push on. And those are the things like babies entering the family, parents downsizing to something more manageable, even moving cities and provinces and getting your first job, even bringing the family members over from other countries to live safely with you. It is the message that I hope to continue shedding the lights on most accurate reality I can print here in the greater Calgary market. So let's get into it. At the end of September marked something interesting that I would like you to take a note of. It has now been one full quarter, or about 90 days, that Canadians have been dealing with the interest rates that are at or over 2% points above what we have accustomed for years. In other words, we have now undergone a complete cycle of buyers and sellers who got into the game and made a move since the rate bump and peak pricing in our city. This group made the move without the benefits of ultra low interest we would have had and before 15 to 20% price increases. Essentially, this group of buyers and sellers were exposed to our new normal and higher prices than ever and rates now back up to around historical norms. This is the group that our recent stats have been speaking about and in my opinion give us a pretty clear picture of what is actually going on. So let's start, as we often do, with a sales summary. Sales are down right now. Stats show around 12% fewer homes were sold last month than in September 2021. There is also a 11% drop from August, which is about 50% sales drop from our peak in March. But looking beyond that, I would like to share two key points. This past March saw sales numbers 30 to 40% higher than we would ever expect at that time of the year, so that earlier negative comparison isn't terribly relevant. And secondly, September 2021 broke records in a post-COVID high pent-up demand and ultra-low interest rate environment. So again, not a marker that is particularly useful to compare to. Historically, when it is just the data being considered, this September total sales number will go down in the history books as top 5 Septembers in a Calgary market. That is pretty good, all things considered. However, things are continuing to shape up quite differently across all 4 property types. Detached and semi-detached homes are where we are seeing the main slowdown, 23 and 27% less than the last year respectively. With detached being by far our largest sector, it is 23% year-over-year slump in what has been dragging down our overall sales stats. Reduced affordability from the rate hikes resulted in fewer sales in single-family homes in general. That is starting to show up as homes in the $600,000 to $1 million price range are starting to take a little longer to sell, and we are seeing a little bump up in active inventory too, adding to the slowdown. Home valued below these price brackets are hard to find and selling very fast. The stuff above that price point doesn't seem to be phased at all and it continues to sell at the same pace as the last year. Where affordability is concerned, the sale pace for the apartment segments continue to drive forward with incredible momentum. To put it into perspective, September had more apartment sales than any given month of 2021. And if you remember, 2021 was a really fantastic overall real estate market. Along with that, our raw home market, the second most affordable market, is near even the last year's pace. And that again is saying something because how strong raws were at this point of the year. Well, let's continue around our message with our inventory story. With sales slowing down, what is happening here is critically important. And if you have been following all my market updates over the last 18 months to 2 years, you'll be very familiar with the messaging. The number of active properties on the market is very, very, very low. Regardless of the sales slowing and concerns about affordability, we are seeing the record low active inventory position. Simply put, not a lot of new homes coming to market and not a lot of overall homes to look at. Now, there are a few sub-stories here. Regarding the detached market, where we have slowed the most, as October 3rd, there were 453 single-family homes on the market under 500,000. In the month of September, there were 283 sales. That is only 1.6 months of supply. Good sales and low inventory equals very tight market. And now looking at $600 to $1 million price point as discussed earlier, it looks like this. 331 single-family homes were sold in the last 30 days, and we currently have 930 active listings on the market. That represents 2.8 months of inventory. That is now more in a balanced market territory, not a seller's market. So we need to be absolutely dialed in when making a real estate decisions today. Please ensure that you are getting the tactical and relevant advice from your trusted real estate advisor. One extra thing about the inventory. The active numbers of homes on the market for semi-detached, row homes and apartments are between 26 and 34% less than at the same time last year. That is a combined of 900 fewer properties on the market for buyers to look at and buy. The more affordable the product, the tighter the market. And as the price point creeps up, so does the inventory for just a little bit. What do you think this does to our ability to fight off a crash? I think it is a pretty strong case. So let's finish off with our pricing picture. This is the one that gets the most headlines, the most comments, and the most mixed messages on. So I will do my best to provide you with the context you need. I like looking at this from a few different ways. How are we doing since the last year at the same time, and how we have done during the last full quarter of buying and selling cycle. So let's start with the year-over-year figures. As a whole, despite the changes since interest rate bumps, we remain between 10 to 15% higher in terms of benchmark sale price than we were at the same time last year. That is a huge win on all fronts. Some might want to chime in and say, well, what has happened since the market peak earlier this year? I would ask why even matters, because unless you're a flipper or have had a financial hardship since being a buyer at the peak, the real estate is a long play for literally everyone else. And the trend matters over years and years, not on just last few months. That being said, our house's prices are down 3.4% overall since the peak, which is equal to about $18,000 for the average home. Specifically though, these numbers differ greatly depending on the location, from our satellite communities to Calgary downtown core, as we see price grow from as low as just a few percent all the way up to 20%. So be careful about the information you hear and the action you take. The second point I want to make concerns our most recent buying cycle, the last 90 to 120 days since rates skyrocketed and affordability plummeted as a result. So detached prices from $647K to $628K, which is about 2.9% decline. Semi-detached went from $581K to $562K, which is about 2.2% decline. Row home prices actually remain fairly untouched, $364K to $362K, which is about half of the point. And apartment prices actually gained a little bit, from $277 to $278. This last bit of the information tells a great story about the state of the market, because buyers and sellers have came to market during the current circumstances of uncertainty, rising interest rates, spiking inflation, and doing so during the quieter time of a seasonal sales cycle. From here, nobody really knows what it will happen, as we were likely to get another interest rate bump in October. But so far, with more than 2% increase, we have already shown prices to be pretty resilient. Now, the most important point of this whole update, I hate to sound like a broken record, but it really remains very important for us in Alberta and Calgary specifically to continue to note that additional macro elements positively affect our economy and therefore our real estate market. We have just experienced the highest net migration to Alberta ever. Yes, you heard it well, ever. Take a look at the last 5-year graph. Look at the massive recent influx of people to our province. Then look at the graphic below, sharing the net migration back to before the double-digit price run in 2004 and 2007, when Alberta was kicking on all cylinders. We brought nearly 10,000 more people to our province this quarter than during the best quarter of that period. Then you go back even further to this graph and show further growth prior to 1980s. The big boom we experienced prior to elderly Trudeau's screw-ups still did not hold a candle to our most recent quarter. So it starts like this, and our unemployment numbers that are below that keeps painting the picture that Alberta will be okay during all these times. Oh, and I can't forget to talk about the tax rate hikes here. Yes, Alberta is the place for Canadians to prosper, to build wealth, and to build retirement savings, to earn and keep the most income, and to enjoy the standard of living not found anywhere else in our great country. And this is not just a Alberta Realtor talking. No, this is a cold, hard fact. And due to the housing pricing gap, we will be seeing this song for well over half of a decade to come, and if not longer. So, could the crash really come to Calgary? My bet continues to be no. And remember, if you require any market information relating to your specific situation, please don't hesitate to reach out. Thank you and have a great month.